Hey everyone, let's do the market review for this week. And it's pretty red out there. Semis total slaughter the entire week, going down pretty big. But we kind of knew this was coming, prepared for it, went cash, and I slowly started deploying some stuff. Bought some DRAM, bought some Oracle, some other stuff as well, like I posted, but it hasn't really worked out so far. The good part is that I think, just under 10% invested, something like this. But today I think I will deploy more and I'll explain why and what. So first of all, where are we? And we look at US 500, basically on this AVWAP. This is the year one? No, the 2025 one. Sorry. Let's put the yearly AVWAP because I don't have it for some reason. This one? Oh no, this was the right one. My bad. So that's fine. So we are coming on the high AVU up here. We're getting close to the 55 EMA, and it's possible that today, if we get like a capitulation drop, which would basically double this one, we would hit this one, and this is the buy point. On US 500, we went below the 55 EMA, and again, we could potentially get like a capitulation drop today to get a VIX spike to maybe like 25, and then we can fade it back down again and do another swing up down on before the bigger correction a bit later. And from what I'm seeing, this is kind of my expectation of what's going on between the technical setups on all the major stuff and the positioning for liquidity to the correlation here. I think this is what's going to happen. And let's start with trying to prove that. So first of all, VIX, it's spiking today, right now. It's OPEX. So because of OPEX, um, this move down will lose momentum. But again, because of OPEX, this move down has the potential to blow up today, like again, to go like +2, +3 on SPY and +3, +4 on Qs before it begins to fade. But I don't expect it to have continuity over on Monday and Tuesday and so on. So if it's a capitulation, it's today. So today is about the dip day, in my opinion. And I think there's the potential for VIX to spike like to 22, 25, this area here, on that type of behavior today. Now, uh, we have the ribbon, and if you remember from a couple of months ago, I was talking about the reconnect with the 21 EMA on the weekly. And whenever we do this type of rounding top, we tend to have multiple 21 EMA reconnects over a short amount of time, meaning a couple of months, like 2, max 3 months. And this is a 21 top, reconnect, bounce, reconnect, bounce, reconnect, bounce, reconnect, and then finally it went below. So we have quite a number of reconnects here. Then at this top here, once again, reconnect, bounce, reconnect, bounce, reconnect once again, and bounce. So we have 1, 2, 3. This one we have the bounce, then we try to go down again another one, and eventually we break down and we flush. And even on this one, like we have, I think this is when I was talking about the 21 EMA reconnect because we hadn't had one in quite a long time, but we had it here. We had another one here, and eventually we broke down and exceeded. Now it's we haven't reconnected with the 21 EMA in quite a while. This is the 13 which we can reconnected. So the first one is almost always a buy, and this is a rounding top in my opinion. It will take a while longer, at a minimum another month or two before it finally breaks down. So a drop to like 7 to 36 would be normal, but it is a dip buy because it's the first of the series that we have the potential to get over the next couple of months. So this one is a buy, and we should be going back towards like 750 eventually, because of this. And the same is true for Qs. Like this is the 2021 one again, reconnected here and overshot, and then multiple ones before breaking down. This one here, like one, two, three, eventually broke down. Here, one, two, and went lower, recovered, and then went lower again. And by the same logic, this is the first one, and it's a buy because it should go higher from here. Uh, w- uh, at the minimum for another week or so. So this is the connection, the setup here with this. Then we have the liquidity that would suggest this. Sorry, why do I have the same one? Uh, I'll switch to the Kospi one. So this is the Kospi one. Let's switch to DRAM. So this is the DRAM one, and kind of iffy the last couple of days. It didn't bounce that I thought it would here, or it did, but then it went lower. But we still have to get this part here. And this part here, given the volatility in memory names, this could be like a 30% move. Let's move to the other tab and just DRAM. So DRAM is here right now, like almost at 50. I wanted to do 50 is a very important level for DRAM. Basically, is the oversold liquidity level is the biggest level as OI for the put side. So flipping this one is unlikely. We also got the number one premium day yesterday. So going before 50, below 50 is unlikely to hold, especially because, like I explained, today is OPEX, and once we go to an extreme and we get an option expiration, it's very likely that we will reverse back up here. And how I think things play out is basically like this. Like we get a kind of like a bear flag looking thing. Again, let's move here. And we could get something like this. Let me try to draw. So bam, 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 bam. Before going lower, and then maybe we go to 40. I don't know, we'll see. But basically, kind of like a bear flag here to this could be less, could be more. Just the idea of it, not necessarily how it will play out. But because we drop so much so quickly, when the short covering or the reversal happens, they should have like the potential to do like 30%, which would be like 65-ish, something like this. And again, I'm not talking just about this name. Even MU, even SNDK, this is just an ETF with them. And also, it would kind of look like a head and shoulders here. We already had one partially, like this plus this. We could potentially say it was a head and shoulders, but we could do like a very flat one and just go here, and then once we start making lower highs and eventually we break down and go, this should go like to 25 or something like this when it eventually breaks this structure. A bit lower, like 20. So this should go like to 18, 20 when it finally breaks down from this structure. But for now, it's plausible that we get this. It could also be uh, this part here when we make the shoulder. So it could be something like a smaller bounce here, like let's say only 20%, only quote unquote only 20%. So only 20%. So goes to the ribbon here. This is, let me, yeah, goes into the ribbon, gets rejected with the 21 EMA, which would be basically sort of like this. So it goes to 58, 59, something like this on this rebound, which is, let's say from this level, almost 20% like I estimated. So basically uh, it bounces 20% on this one. So we are here, we bounce 20% to the dropping 21 EMA. We get rejected. Eventually we go lower, but not much significantly lower, like maybe 44, 45. And then we get our shoulder possibly like this. Yeah, I think that's reasonable. So basically this, and we bounce here, and we get our second shoulder on this bigger rally that begins in August. And then we get our shoulder, and then it's lower highs, eventually break down, blah, blah, blah. But you get the idea. So something like this is very plausible for DRAM, even considering how oversold it is, especially if we get like a capitulation today, which would double this. So basically, Qs goes to minus 4% almost, and SPY to minus 2%. Either DRAM would go to like maybe it goes all the way here to 45, 46, and then we get that type of bounce. So I think it's worth it to try playing these short-term moves on them on various names. You can also just buy the dip on Qs because it should be the safer bet here instead of going with DRAM. And for Qs, the expectation is that it will go to the 21 EMA weekly, which is 681, and then we go back up again, maybe all the way to the 732 or something like this eventually. But the liquidity thing has helped quite a lot with mapping how things are going. This is kind of like min-maxing behavior, what I'm doing, trying to play all these small moves, even though I'm doing it with a very small part of my portfolio. Today, if we get like a capitulation where Qs goes minus 4%, I think I might go like plus like 25%, 30% invested. But the non-min-max version of this trade is basically wait until end of month, buy the bigger rip that's going to happen at that point, and just wait and do nothing and just watch people go crazy over market moves. But I'm trying to practice this type of stuff more, and I will be playing it because I want to get better at it. But we'll only go super big on this type of move that we expect at the beginning of August, which should be like 30, 40% even, depending on how low we go eventually on the memory side. Uh, but even these ones are profitable. We'll see how they play out if it works. Don't go very big on this type of moves. But if we get capitulation today, I think it's fine to go big for just like a couple of days, not too much, not too much. I expect this to play out by next Friday as well. So I will not be staying in this trade quite a long time. If I go in bigger today, it's gonna be at most until the end of next week, and then we just mm, let it go and wait for the bigger pullback or get some puts or something. I don't know. We'll see. So that's it for today. It's not anything big because nothing really unexpected happened from my perspective. We're just waiting to see it play out and try to buy the dip for the small percentage plays, but it's experience and learning how to do this stuff. Okay, that's it. Have a good one. Bye bye.